Am I streaming? I am streaming. Uh-oh. Why am I all... Hold on, let's see if I plug this in. Am I still a little laggy? Yeah, that don't seem to be wanting to work. All right, y'all. I'm here. No webcam today. I'm going to just turn this off. We'll do our market update without the webcam. We don't need no webcam. All right, everybody. Happy Monday. It is about AccuWeather. Thinks it's about 88 degrees out right now. Seems about right. It's about 2 p.m. So obviously that's afternoon. Usually lasts at least a couple weeks. We've been in like the low 90s around now, so we're definitely cooling off a tiny bit. Getting to that fall-ish weather, which is pretty nice throughout the rest of the week. Looks like towards the end of the week we're gonna start to see that 86 high, 87, 86 high that we really crave here in the wintertime, which is going to be awesome. I know, those of you who are up north and out of the area, it's going to start getting cold here, Southwest Florida. We're going to stay nice and warm between, 50, 60, 70, 80s in the winter. 50s is it's really cold here if it ever gets down there. So we're not really used to that. Let's jump onto the actual market stats. So for the most part, everything's been holding pretty steady. Mortgage News Daily. So the mortgage rates are pretty steady. We haven't had any more drops with the Fed. We haven't had any more drops with, the actual bond rates. Last week they were at 6.35. This week they're at 6.38. So as we had kind of talked about a little bit last week, some of this could have been priced in. So as we see here, 9/16/25. The mortgage rates, this was before the Fed had officially cut their rates, so the market was preemptively dropping the rates, just anticipating that coming up soon. However, those seem to have rebounded a tiny bit, but the rates are still substantially lower from where we've been at for the past year or so. Last year or so, rates have been between high sixes, mid sixes to even as high as 7.25 on average. So getting this back down into a good normal affordable range, if we look at all time, we're probably going to end up leveling out some here in this 4 to 5% range potentially long term. But as you can see, all time mortgage rates have been consistently steady dropping, and in the last couple years we've gone up, but we should start to see over the next couple months start to see this go back down a little bit. Again, this is just tracking the U.S. 10-year bond. So this is basically the treasury bonds that the government issues. People are able to buy these. They buy them, off of a spread from the actual Fed rate. So if they're, just because the Fed rate's low, people don't necessarily think that means good or bad economy. So this actual bond rate, right now the bond rate's being higher. This means that America is seen as a little bit more of an unsafe investment than it was down here when the bond rates was super cheap. Now it's considered a more safe investment, just because if they're going to be buying the bond, they're going to be putting money out, they want a higher return to take that risk. So that's kind of where we're at on that bond market. So as these bond markets start to drop and we start to get those levels that we've seen pretty much historically, low threes, high threes, maybe pushing fours. We're definitely above that range right now. But as we start to get back down in that range, the mortgage rates are going to compensate for that. So Basically, the bank is, they could just go buy a government bond for 4%, or they could go loan you the money at 6%, make that 2% spread. So that's kind of how they're getting their, numbers from. So as this number drops, that mortgage rate drops, substantially as well. Again, it's just kind of based on where they can put their money, whether it's worth it for them to take the risk on the mortgage, or whether they could just get a safe investment and make the same amount. So actual stats now, not this one, this one. We're going to just pull the last week. So it seems like I said in the title, pretty much everything for the most part has been pretty steady. I am interested to look at a few of these different stats that we've been paying attention to in the last couple years, but our actual main numbers, new listings, solds, pendings, all that kind of stuff has been pretty steady for the last couple weeks. If anything, our absorption rate's gotten a little bit better, which is, definitely a good sign. If you're a seller, that means property values are going to go up a little bit more. If you're a buyer, slightly more competition. But definitely something we're going to keep an eye on. So median sales price this week, $342,000 compared to last week, $335,000. So we technically have gone up this week in median sales price, which is pretty cool. Closed sales, we are slightly down. So last week was 191, this week was 173. So as we've been mentioning for the past couple weeks, pending sales are up, listings are up slightly, but the actual closed sales have not been showing for that. So whether people are getting under contract and they're backing out, whether they're just maybe putting multiple offers on stuff, multiple people are accepting, they're only closing on one, whether people are being picky about inspections and things like that. Definitely not all of the pending sales are closing, and these closed sales are technically down a tiny bit from last week. Percent of list price received, so this is the percent of the last listing price that's going to be received. This is actually up a tiny bit, so this is showing that sellers are definitely getting more realistic with their pricing. They're pricing more in line with current market value, not old, previous market value. They're more in line with this current market value, so whatever their listing percentage at, more in line with actual market value than, if you're getting a 94%, that means, obviously people are wanting to take 6% off the price. So this coming up slightly just shows that the sellers are listing a little bit more where they need to be. Percent of original price received, this is definitely an interesting one as well. So this is the percent of the original price received. So before any price reductions, the original listing price that the house went at, this went up slightly as well. So again, just kind of shows you that sellers are pricing right from the beginning. Percentage cash sales, this is going to be an interesting one to look at. So this is actually down slightly from last week. This will be one that we want to keep monitoring as well to see what percentage of people are actually getting financing, what percentage of people are just getting, paying cash. When rates are super, super high, we see a very big percentage of people paying cash. When rates go down, it makes more sense to finance things sometimes. The average buyer is able to enter back into the market, and even investors that are doing loans and stuff like that, they're able to make those numbers work at these lower interest rates. So then we're going to start seeing more finance deals. Days on market for closed, this is going to be 81. So that is, let's wait for this chart to pop up. I forget what it was last week. Okay, so this is actually not a great look. So this really shows us that days on market is up. So for all the closed houses, this is the median days on market. So this is technically like a breakout is what we would consider it. So having this steady through the last couple weeks, 63 to 49, that really showed that, people, as long as they were pricing right, they were finding some good stuff. But these last couple weeks, we've been seeing this go up. So this is definitely one that we're going to want to, keep an eye on. It seems like for the most part, listings are just in general taking longer to sell, even when we're doing the 3Ps, price, presentation, promotion. So just something to, consider if you're a seller. List to close days is going to be similar. Yeah, same there. All right, now let's see here. New listings, this will be a good one to check out. We always like to check this out. New listings is holding steady, so this is a pretty good sign. We want to start seeing the pending sales go up. If you're a seller, people are going to start listing, their homes as we start to come into season. October, November, December, January, February, that's our primary season. People are coming down. People are in the area full time. They're down from up north, so we're going to see more listings. That's generally when people tell sellers, like, hey, you're going to get the most activity during seasons. So listings should start to see a pretty good jump, come mid-October like we did last year. As you can see, 300 to 500 to pull back a little bit, and then in January a bunch more. So if you're a seller, it's kind of a good sign that things have been steady the last couple months. But again, chances are you're going to start to see more listings coming now that we're entering season. So you're going to want to hope that there's going to be more buyers entering the market as well to be able to take care of those listings. Otherwise, we're going to continue to enter even more of a buyer's market than we already are, even with the drop in rates and stuff. So this is actually a good sign. So 249, this is good. So we're going to want to watch this from this 246, 249 level. If we start to see up from this 300s again, now we're going to start to consider it a breakout. We're going to start to hopefully see these pending sales rise again. So this is really, really good if you're a seller. This means that more buyers are in the market, more buyers are shopping, whether it's interest rates, lower prices, whatever the case is. More buyers are in the market, more pending sales are happening. If you're a buyer, competition's getting a little bit fiercer. There's definitely, from last week, there's 20 more people that entered contracts this week than last week. So if that number continues, obviously you're going to have more and more buyers that you're competing against to secure houses. Active inventory, this one's definitely another one that we want to keep an eye on. So this has been dropping pretty substantially. So this is going to be the total amount of active inventory on the market. We have been seeing a lot of those phantom listings, the pre-constructions, under constructions, those kind of things been getting pulled off the market. What's active on the market are people who are actually wanting to sell, needing to sell, not just like, hey, I have a second house and I'll sell it for $1 million if someone wants to buy it. It's like, hey, I'm moving, I got to actually sell. So what we were seeing for a while there was just crazy amount of inventory, just because people overpriced listings, new construction that hadn't even been started yet, stuff that was under construction, pre-construction, just showed a bunch of listings and not everything was really, really a listing. But now this active inventory is going down though. So if you're a seller, this means less competition for you. If you're a buyer, this means less selection for you. So this is definitely, if you're a seller, this is a good sign. This means that your house is going to stick out more against the competition. And if you're a buyer, you just have less to choose from. Supply of inventory, so this and the absorption rate we're going to want to check out. So this it's right above what NAR considers a balanced range. So right now we're at 38.2 weeks of inventory. This was up from 34.9 last week. It looks like we want to be right between 23 and 25 compared to NAR's balanced range. So we're about 10 weeks extra of supply. What that means is the amount of active inventory versus the amount of solds, how many weeks it's going to take to clear out all of that inventory. Absorption rate's basically just the flip. It's the amount of active inventory, what percentage of them sold. So what percentage does your house have chance of selling? So 2.6%. So again, NAR balance range, they think it's between like 3.2 and 4.5%. So we're definitely below that. So if you're a seller, you're going to want to start to see some more buyers enter the market. You're going to want to start to see this absorption rate go up. You're going to want to start to see more listings get taken off the market, more buyers and compared to sellers. If you're a buyer, you're going to want to start to see this continue in the way that it's going. That means that listings are sitting for longer. You're going to have more selection of listings. You're going to have more options, more ability to negotiate price drops, incentives, credits, all that kind of good stuff. Pending inventory. So this is going to be one this is another good sign. So if you're a seller, this is definitely a good sign for you. So that means over the last couple weeks, pending inventory has been consistently going up. Again, as we have mentioned in the sold inventory, we haven't 100% reflected that in the solds yet. So whether that means that people are putting in multiple offers, maybe people are taking lowball investor offers, the investors aren't actually closing. Maybe the people are buying, they're entering into a contract, something pops up on inspection, they're deciding they don't want to close. Whatever the case is, there's definitely some kind of disconnect between pending and sold properties, but the fact that these pending properties is still high and it's still increasing definitely does show you that those interest rates dropping, those prices going down are definitely having more buyers enter the market, even though those buyers are still a little bit weary at the moment. Unsold listings, withdrawn, expired, or canceled, 159. So this is actually one of the lower amounts that it's been over the last couple months here. So that's a decent sign if you're a seller. Again, if you're pricing right from the beginning, if you're promoting well, if you're presenting well, those first 2 weeks are crucial. So that's when you're going to have your biggest time. If we can get those right from the beginning, you're going to have the most success. Again, if you're a seller, we're going to want to see pending inventory go up. We're going to want to see sold inventory go up. We're going to want to see active inventory go down. You're going to want to see less competition and more buyers in the market. And if you're a buyer, you're going to want to see less competition on the buying front. So that means less pending sales, less sold properties, and more active inventory available. So that means you're going to be able to get the best price, get the best credits, negotiate the best deal for yourself. And then same thing on the flip side, if you're the seller and there's less inventory, more buyers, you're going to be able to get the upper end of that deal. So right now we're in a very balanced market. It seems like we've been holding steady for the last couple weeks, in comparison to that slowdown that we had over the last couple months. So holding pretty steady at the moment. If you guys have any questions about any of these stats, what this means for you or your scenario, whether you're buying, selling, investing, whatever the case is, my team and I is here to help you around the clock. Give us a call with the number in the description below, or you can schedule directly on my calendar in the pinned comment. Thank you all again for watching. I look forward to seeing you next week. We're going to make sure we get to the webcam back so you guys can see my pretty face, and we'll see you all then. Thank you all for watching. Bye.